2026 isn't a transition year. It's the point of no return. Innovation rewrites the rules.
Every era of human history is defined by a single question. How do we power our world?
Energy is more than fuel. From fire to steam, from coal to oil.
But every energy system carries a cost. The air grew heavier, the oceans warmer. We had the knowledge to change course, but not the certainty to act. For decades, green technology lived. Then something changed. Innovation accelerated, manufacturing scaled, costs collapsed. By 2026, the question was no longer, can we afford to go green? It became,
History does not move in straight lines. It moves in surges, driven by crisis, shaped by innovation. For years, climate goals were framed as distant deadlines, 2050 targets. This is not a lifestyle movement. It is an industrial reset. At the heart of the transformation lies a simple principle: electrify everything. Anything that burns fuel can be replaced with electric alternatives. That solar and wind crossed a historic threshold when they became cheaper than fossil fuels. Homes became power producers. Communities became energy networks. The grid didn't collapse. Energy abundance requires storage. Lithium batteries led the first wave. Sodium-ion batteries expanded access. Energy became infrastructure, not privilege. Electric vehicles didn't win because they were forced. They won because they were better. The combustion engine wasn't banned.
Renewable energy created complexity. Artificial intelligence created balance. The grid learned to think.
For industries that couldn't electrify directly, green hydrogen and carbon capture became bridges. Waste became raw material. Recycling became profit. The loop closed. Every industrial revolution creates wealth, but only for those who recognize it early. Green technology is no longer experimental. It is investable. Green investing means putting quarters. This is not charity. This is strategy. For many, the safest starting point is green exposure. For beginners, green ETFs are the most reliable. They allow investors to spread risk across multiples. As understanding grows, investors can add individual green stocks: solar, wind, batteries. The rule is simple. Avoid hype. Focus on real revenue and long-term demand. Not all green investing is high growth. For stability, green bonds play a critical role. Green bonds offer lower risk and steady returns by funding renewable energy and clean infrastructure projects. Before asking how much to invest, there is one rule. Never invest money you will need within 1 year. A simple approach. Start with 5 to 10% of savings. Invest monthly. Increase gradually. Green energy investing is not a trend. It is a multi-decade opportunity. Like electricity, like the internet, this transition is policy-backed, demand-driven, supported by physics. Early volatility gives more resist. By 2040, clean energy is expected to be the cheapest option everywhere. In the United States, capital met innovation. Green technology is now driving a sustainable digital future. As digital demand nodes, the United States is proving that innovation and scale together. Solar power, carbon capture, green data centers. These now sit at the core of America's net zero strategy. In the United States, solar photovoltaic technology now dominates clean tech investment. Artificial intelligence has become a force multiplier. It optimizes energy forecasting, stages power grids. Carbon capture, utilization, and storage continues to scale rapidly. In the United States, project structure, digital infrastructure now rivals heavy industry in energy demand. In the United States, clean power is becoming America's data centers, among the world's most energy-intensive assets, are now leading clean power adoption. Not every sector can be electrified directly. Steel, aviation, heavy transport. In response, AI-driven sorting systems are transforming recycling, recovering valuable materials and earths.
Energy transitions are not driven by technology alone. They are shaped by rules, incentives, and capital.
The shift is no longer theoretical. The U.S. green technology market is projected to approach 30 funds. Markets are responding. Companies with strong mental, social, and governance strategies are outperforming their peers. Long-duration storage stabilizes clean power across seasons. Regenerative agriculture and digital soil monitors. The transition is not without friction. Rising artificial intelligence demand is placing real promise. With federal tax credits reducing risk and accelerating deployment, the United States is positioning itself as a... This is not policy, it is economics. History has already locked this transition in. For investors, positioned for decades of compounding growth. And for future generations, green technology is no longer the future of energy alone. It is the future of wealth.
Thank you for staying with us until the end.
If you found value in this journey through green technology, financial transformation, and the future of investing, stay curious, stay informed, and we'll see you in the next story.